Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG, and on behalf of KPMG and Airline Economics, I'm delighted to be joined by Joe McConnell. Joe is the Deputy Co-Chief Investment Officer with Castlelake. He's joining us for the purpose of our Aviation Leaders Report for 2025, and we're recording this in mid-October in New York. Joe, thanks again for joining us. Before we get into the meat of the conversation, do you want to tell our watchers a little bit about Castlelake?
Yeah, absolutely. Well, thank you for having me here, Joe. Great to be with you again. Castlelake is a private investment firm. We focus exclusively on asset-based investing. When you think about asset-based investing, to us that is aviation and real estate and other financial assets such as consumer lending as well as small business lending.
Excellent. And Joe, maybe we're going to be chatting aviation today, and maybe we'll start on the airline side. You guys have a very significant portfolio. Can you talk to us around how you've seen the demand environment evolve over the course of 24, and just are there any interesting geographic trends within that?
Yeah, absolutely. So when you think about the demand for air travel and for the underlying aircraft, it's important to take a step back. And over the last 50 years, demand for aircraft and for air travel has grown at about 1.5 to 2 times GDP. That's through many different economic cycles, most recently a pandemic, and this industry has proven to be rather resilient on the demand side. So as of right now, we are seeing demand quickly get back to that trend line. On a global basis, we are seeing it everywhere. People want to fly. The challenge right now is supply. And the OEMs are having a hard time delivering new aircraft. When they do deliver new aircraft, they're having a hard time keeping the engines on wing and out of the shop. And so we are rather optimistic about the demand environment today. Touching on various geographies, the U.S. was the first region to pull out of the pandemic. We are now seeing some interesting trends there in terms of the difference between some of the larger airlines and some of the smaller airlines. South America, Asia, other emerging markets, we are seeing significant demand tailwinds. Europe is a little bit more of a mature market as well. So overall, we're feeling rather optimistic about the demand environment today.
Yeah, and that demand piece we've clearly seen, and is a very positive piece for the sector. Do you have any concerns, or I suppose we always have concerns, but how concerned would you be in relation to maybe macroeconomic challenges, whether that's kind of a global downturn, or kind of geopolitical risk? Do you think that's at a particularly heightened level?
Absolutely. Absolutely. Running an airline is a tough business. You're not selling software under a 10-year contract with 40% margins. Running an airline is always a tough business. Your input costs can be volatile. Revenue needs to be generated every single day. You need to go out and sell tickets. It's highly competitive. And so there are always pressures. The pressures today are on the labor cost side. You're seeing significant inflation in labor costs, and also in terms of aircraft maintenance costs, significant inflation there. So there are some real cost pressures on the airlines, which most of them have been able to pass that on to the customers in terms of higher fares. But it's something that you need to keep a close eye on. Not every airline has a strong enough market position to pass on all of the higher costs. And then when you think about the aircraft reliability issues, that is a major concern for airlines today. Can they have enough confidence around when aircraft will be delivered and how long they will actually be able to fly before they need to go back into the shop? It's creating real issues within those airlines.
So Joe, just to bring you back to a point you touched on in one of your earlier answers there around the supply side challenges we're seeing. Mm-hmm. As we sit here in mid-October, the Boeing strike is ongoing. Hopefully that's a short-term issue. But the long-term issue is the production rates aren't really where they should be, and they haven't got back up to 2019 levels. Can I get your perspectives on what impact that's having on the market?
A lot of impacts. Airlines are feeling it right now. As discussed, difficult for them to manage their businesses when they don't know how many aircraft they're going to be able to fly. That is flowing through to the lessors. It's impacting some of the largest leasing companies that have order books significantly, and that they have too much liquidity today, and they don't know when aircraft will deliver. And so managing their balance sheets and hitting their target ROEs and hitting their target leverage metrics is more challenging than ever. And so there's a little bit of a liquidity overhang on the front end of the market for younger aircraft, given the lack of supply of new planes. In the midlife part of the market, it's a little bit different. We are seeing a lack of capital competition there due to the impacts of the pandemic. And so we think there's an opportunity there to step in and buy some midlife aircraft. But just in terms of the supply of planes and when does it correct itself, it's anybody's guess. These issues are throughout the supply chain. 1 month it is seats, the next month it is other components. The engine OEMs clearly have some issues to work out as well. And so it's going to continue to take time for them to work through that, to ramp up supply. And then we do continue to believe that demand hangs in there just to absorb the supply when it does come.
Yeah, and then I guess the natural correlation with that is where you have supply constraints that we've talked about, demand holding strong, is the lease rates should be driving upwards. And can I get your perspectives on how you're seeing lease rates evolve in this market?
Yeah, absolutely. So they're higher today than they were over the last few years. For new aircraft, again, many of those aircraft were placed years ago, and they have escalation, which is tied to interest rates. And so there's some correlation there for new aircraft where you're seeing higher lease rates for new aircraft tied to interest rates. The big question is, as the OEMs continue to drive prices higher for new aircraft, how much of that can be passed on to the airline customer? This new technology has reliability issues. It clearly has environmental benefits, but there's a certain limit at which you're just not going to make money in terms of a lease rate. And so the question is, as the OEMs drive prices higher for new aircraft, will lease rates continue to go higher? That is a real question that I think the industry will have to sort out over the next 5 to 10 years. For the midlife part of the market, we are seeing lease rates rise 10 to 15% this year. For narrow bodies, there is significant undersupply on midlife narrow bodies. We went out to 100 of our airline customers recently. 70% of them need more aircraft in 2025. We're sitting here in October 2024. By now, they should have the aircraft locked in for 2025. They don't. That totals up to about 700 aircraft that are needed across those airlines. And so that's driving lease rates higher. Wide bodies, it's even more pronounced. You're seeing wide body lease rates recover quickly. They obviously dropped off a lot more severely through the pandemic. There is a significant undersupply of wide bodies. And so overall lease rates are continuing to recover. It's a good thing for aircraft investors.
And presumably that also feeds into what you're seeing from an extension request perspective. Can you talk to us over, has that evolved a bit? So it seems anecdotally airlines are reaching out a lot earlier and they want to hang on to that aircraft to the extent they can.
Yeah, we don't have any available next year. We don't have any available in the first part of 2026. And I think if, you're going to speak to many leasing companies, you're going to hear the same thing. The reason why we don't have any aircraft available for lease is because any airline that has aircraft coming off lease has already tried to extend those because they don't have confidence when new aircraft will deliver. And they want to make sure that they have aircraft to fly because demand is back. And so we're seeing a lot of extensions across the fleet, narrow, wide, every region. It's a good thing. And we're working closely with those airline partners to make sure that we're being a good partner to them to make sure that they have the right aircraft to fly to match the demand environment.
And then maybe talking to the trading environment, you guys have a large portfolio, you've been always very active purchasers and sellers. Can you talk to me about your perspectives of how the trading environment is operating in? I think, a word I heard last year when we talked about it was stodgy, kind of slow, transactions maybe not where they were from a trading perspective. How have you seen that market evolve?
It's back in a major way. We are seeing more aircraft for sale than perhaps ever in my career. That's the result of a few things. One is many of the owners of aircraft older than 5 years were funded and created before the pandemic. 2017, 2018, 2019, we had 50 leasing startups. Many of them faced real challenges, as we all did through the pandemic. And many of the underlying equity investors were new to the space and chased the yield. And through the pandemic, the results weren't exactly what they expected. And so now they're moving on to other things. And so the owners of those aircraft, the servicers of those aircraft need to sell. What you see in any real stress event, whether it's aircraft or real estate or otherwise, is it's in the private markets, the selling doesn't occur at the same time as the stress event. It actually starts to occur 2 years after. And that's exactly where we are today. It's 2 years after the stress event. People need to return capital to their investors. They are realizing the results aren't going to get back to where they wanted them to be. And so now we're seeing a lot of selling. We're also seeing selling from the large leasing companies. That is just regular way, $10 to $20 billion a year of aircraft that comes out of the large leasing companies as they age. And so there's a lot of opportunity there. We're also selling a lot of planes ourselves. We manage funds. We need to return capital. And so we obviously executed the transaction with Aviation to sell about $5 billion of aircraft. That will allow us to return capital from a pre-pandemic aviation fund. And then we're also out selling a bunch of other aircraft from our ABS structures. And so one of the beautiful things about aviation investing is the liquidity that you can find in the trading market, which is a real benefit to a private market investor. It's not like other private asset classes. There is more liquidity in aviation than many people would expect.
Yeah. And one area of challenge we've seen over the last couple of years has been the interest rate environment. And we would have seen, at the outset in 22 an expectation that interest rates were going to rise, but probably the scale and pace caught people a little off guard. As we sit here in October, we're starting to see some rate cuts. Can I get your perspectives on how that interest rate environment is impacting the aviation finance sector?
Rates are higher today than they were pre-pandemic. You need to expect that they continue to remain higher. Therefore, you need higher lease rate factors. We believe the higher lease rate factors don't exist for new aircraft, given the capital overhang. There's too much capital given the lack of new supply from OEMs chasing new aircraft. And so we don't believe that the lease rate factor increase for new planes has offset the rise in interest rates. And we're not going to make a bet around when interest rates go down in the future. We are never going to speculate on interest rates. We buy aircraft and we hedge rates. In the midlife part of the market, we are seeing higher lease rate factors, given the lack of capital competition, given some of the more motivated selling there. And the higher lease rate factors, we do believe offset the rise in interest rates.
Yes, and so an interesting dynamic there, as you say, between the new tech and the midlife space. If we move on to the liability side, can I get your perspectives on the health of kind of the aviation debt markets?
Yeah, in terms of the overall health, it's pretty good right now, I would say. We've had a large number of aviation lenders leave the market, though. In fact, 8 aviation lenders sold their entire aviation lending book and have exited the business. And we're seeing this across many asset classes. It's bank retrenchment due to increased regulations, which is resulting in a higher amount of capital that needs to be reserved on their balance sheets. It is driving down the returns for a regulated bank to lend against aircraft, and also just through the pandemic, many people within these organizations said this is a non-core asset. Let's move on and do something that's more core to our business. So there have been a number of large aviation lenders that have exited. Other banks are growing, which is great to see. But where they're growing and where they want to deploy capital today is with servicers and asset managers that performed through the pandemic, through the greatest stress test in aviation. And that is really different than we saw in 2018 and 2019, where capital from banks was available to anybody and everybody had access to warehouse facilities. And so Castlelake's track record, our deep relationships with these banks, we believe is a real differentiator for us in terms of access to that bank debt financing, which is so important to everything we do.
And I suppose one debt product we've seen come back over recent months has been the ABS market, a market that's been very important in aviation finance, a market that was doing so much activity pre-COVID, came back very strongly then in 21. You guys were very important in bringing that back. Then we Russia and interest rates kind of shuddered again. Can I get your thoughts on one, how important the ABS market is to aviation finance, and two, just how you see it evolving in the near term?
Yeah, ABS is a very nice to have. It's not a must have. The bank and ABS and other debt financing markets in aviation are always moving, and you need to move with them. You can't get stuck just focused on one product. You need to innovate and evolve. ABS market shut down, we created CA Limited, corporate recourse issuer. We grew that, we sold it. The ABS markets are open again, and so we're likely going to be back in the ABS markets. It's a great tool to have for us to finance midlife aircraft. One of the challenges, though, that people are facing today is rates are higher, amortization is a little bit higher, and lease rate factors for young aircraft aren't up enough. And so there's a limit in terms of the debt capacity within those structures, given that debt service is higher and the cash flows aren't high enough. And so we're really focused on making sure that we're buying high quality assets at good prices, but then we want to make sure we have enough cash flow from those assets to service the right amount of debt, given that rates are higher.
Yeah, it's an interesting one, isn't it? You kind of need those repriced leases to reflect, as you say, the demand and the interest rate environment. And then if we maybe see rates come down a little bit more, then that product could really take off again in a significant way. If I can move you maybe onto the investor side, Joe, you guys, as you mentioned, right, interact with like numerous investors and lots of them coming in aviation finance. Can you talk to us, have we seen any interesting developments about the types of investors who are attracted to aviation finance?
Yeah, absolutely. It's different today than it was in 2018 and 2019, where you had a lot of tourist capital. Tourist capital comes into spaces like aviation when there isn't yield available elsewhere, and they're really searching for yield across their organizations. And as I mentioned, many of those investors didn't have a great experience with aviation. They realized that yes, it's a higher current yield, but you need to really be prepared for volatility and be able to manage assets through that volatility. And you need to be really aligned with the team that is servicing those assets. And some of that misalignment was created through the tourist capital coming in and the search for asset growth within some of the servicers. And so today, we believe you have the large group of investment grade leasing companies. They are very active, very well run companies. They have their niche, and it's a great business. In the midlife part of the market, the number of participants has significantly been reduced, and so that is where we're focused on right now.
And maybe keeping with that leasing market, the elements we've talked about here really point to scale being of increasing importance. Scale is important in any sector, but arguably it's got more important within the leasing space. Do you think that will drive more M&A and consolidation across the space?
There will always be M&A, absolutely. And there are a number of large leasing companies that have had great results. They have access to liquidity. Their shareholders want to give them more capital. They want to continue to grow because this is a good business, and those are well-run businesses. And there are other leasing companies where their shareholders have said, wow, that was a really challenging period of time. I'm going to move on. And so you will continue to see that consolidation. It is healthy for everybody. In the midlife part of the market, you are seeing it in real time. Significant selling from some of the smaller leasing companies who are moving on. And so, yeah, there will be continued consolidation. We will hopefully participate in some of that. It's a good opportunity for everybody.
Yeah. And would you agree then with that position that scale is more important?
Yes, absolutely, to a certain extent. And we're seeing that today, given the importance of having large airline relationships. Airlines want to work with counterparties who are not just there to buy a few aircraft and then sell them and move on. They want to have relationships that are long-lasting with people that they trust and believe in that can do more than just buy and sell aircraft. Castlelake's ability to offer them financing across the stack, across all assets on the balance sheet, whether it's through Itasca, through some of our insurance SMAs, our ability to finance non-aircraft assets, the ability for us to show up and have those holistic conversations with the CFOs within those airlines we believe is a real value add. And so we do think the scale helps there. It helps with the banks in terms of getting the right cost and structure of debt financing. Banks want to work with fewer counterparties that they really believe in, that have proven that they can manage assets through volatility. And so, yeah, scale does matter, and we're seeing that today.
And just in closing, Joe, as we say, we sit here in October looking out into kind of next year. What are your optimism levels like?
We made it through one of the most challenging periods of time that any asset class has ever experienced. So we are very excited about the opportunity set today. We are very excited about the relationships that we continue to have with so many airlines around the world, and the really creative solutions that we're able to discuss with them to help them finance their businesses going forward.
Excellent. Well, listen, on that hopeful note, I'd like to thank you as always for your time and insights, and wish you and Castlelake a very successful 2025.
Thank you, Joe.
Cheers.